In the fast-paced world of business, finding a clear path to profitability can be a challenge. Welcome to 0 to 100 with your host, Jared Guy Randolph, seasoned business and finance expert. Tune in for actionable insights and strategies to accelerate your business success.
Hello, Accelerators. Today on 0 to 100, we have an incredible guest, Brandon Madden, who is the founder and CEO of Tax-Free CEO. As a business owner, a keynote speaker, an author, and a leading enrolled agent, he works with business owners across the U.S., helping them reduce their tax bills. Today, we're going to cover some great topics, which are going to be super helpful for your business. Things such as developing that right tax strategy, building the tax team that's going to truly save you money and help your business operate efficiently, wealth building strategies around taxes, and how to avoid the common mistakes that business owners make. For those of you who do not know me, my name is Jared Guy Randolph. I am the founder of BoxFi. We are the nation's leading payment consultant, and we work with businesses across the U.S. building business growth solutions. I'm super excited to share the network that I've built over my 25-year entrepreneurial career to bring you ways in which you can create more profitability and grow your business. Ladies and gentlemen, let's accelerate together. Brandon, thank you for joining us today on 0 to 100.
Thanks so much, Jared. Glad to be here.
We're going to talk today about what you do for business owners around taxes. And you are a true expert. And taxes, as we know, can be incredibly confusing. Let's talk first and foremost about why you created Tax-Free CEO.
Yeah, definitely. So Tax-Free CEO, I created it really because I noticed a few things. And as a trained accountant, this is my major, went to school for it, did my MBA in finance. I've been in the financial world for a long time. Worked for the largest public accounting firms, finance firms, things like that. And so when I opened my own firm, we originally called it Invent You. And it was, we did accounting, tax, and consulting. And that was really focused around the prep work of the taxes, the monthly accounting, the bookkeeping, the day-to-day operations, things like that. With Tax-Free CEO, we noticed there were a specific group of high-earning business owners and professionals who were gridlocked with their taxes, and they needed a way to really unlock higher deductions and be a little bit more creative. And so we created Tax-Free CEO, one, as a knowledge hub, so you can actually be educated and learn what you need to learn and apply it to your business, but also we're strategically tax planning with you on a quarterly basis and yearly as well. And so the entire program, Tax-Free CEO, is really geared towards that high-earning business owner, service-based business owner, and service-based professional, and real estate investors. Yeah.
So let's talk about the fact, and we're going to come back to real estate. We're going to come back to what you do for our audience, business owners, entrepreneurs. But let's talk about your unique position in the marketplace as an enrolled agent and walk the audience through what an enrolled agent is. Because, by the way, this is within the last maybe 10 or 11 months, I've become familiar with what an enrolled agent was. Prior to that, I had no idea that it existed. So tell us what you do and what makes it unique from a CPA or a regular accountant.
Yeah, definitely. So an enrolled agent is the highest credential the IRS offers. And essentially, we are federally licensed. It goes through the Department of the Treasury, and obviously the IRS is underneath the Treasury. And so we take 3 long exams, all on different areas of tax. So the first exam is based on individual taxation. The second is business taxation. And the third section is representation. And another cool part about being an enrolled agent is we perform very similarly to a tax attorney, where we study the tax law, we understand the code, and we are legally licensed to represent clients in all 50 states. Tax representation for back taxes. We can consult with clients in all 50 states. And so that's really interesting, right? Now, on the contrary, the CPA exam, I'm not saying one or the other is better. I'm just saying the CPA exam doesn't necessarily focus all on taxes. And so for me, I was interested in tax, and I said, okay, well, I'd rather take an exam that's really focused and geared towards tax professionals. With CPA exam, and I've had my fair share of it, right? I did the 150 credit hours. I passed half of it. But I realized the exams were telling me more about financial reporting and auditing. And one section that was geared towards taxes. And so I figured I don't really need auditing if I want to work with business owners, right? The auditing part comes in when you're doing kind of public accounting for these billion-dollar corporations. And so that's really why I chose the enrolled agent's license. And that's more about what we actually do.
So as an enrolled agent, when you come into a business and you're working with a business owner, what are your foundation or your principles that you're following to help them figure out ways in which they can save on their taxes?
Definitely. So I think that first you have to put yourself in their shoes, right? So I always do that. And the best way to do that is even before the call, I have them pretty much fill out a questionnaire, right? So you fill out the questionnaire and now we can get a preliminary sense of where you are.
Mm-hmm.
And even before having a call, we can start thinking of different strategies for you. Now, on the call, one, we're sympathizing with them and empathizing because most often, if you're coming to us, you've paid way too much in taxes. And you're saying, well, how do I keep more of my hard-earned money? And that's something that we understand innately. Everyone would like to keep more of their money. And so the first step is really empathy and understanding the situation they're in. The next step is understanding where they're trying to go. And so the gap, we kind of stand in that gap for them and bridge that gap of where they are right now, paying extremely high taxes, not being able to save most of their money that they make, and then standing in the gap to where they actually want to be and what their future looks like if they were able to keep more of that hard-earned money and spend more time with their family, because now they don't have to work even harder to make more money just to pay more of it in taxes, right? And so we stand in that gap for them. So that's really what the conversation is like. It's really future-focused. It's something that's not rushed. And most times, especially when you're just doing tax prep work, between January to April, it's kind of a rush just to get your tax return filed. And that's not the space that we occupy. It's more of a conversation. It's really fun and it's really helpful. And we do all that before December 31st.
So that was a good general overview of what you actually do, but give me like 3 go-to tax saving strategies that no matter what business you're in, you can implement.
I think that most business owners, whether you're service-based or product-based, that's really how the IRS differentiates between the two. I think S Corps are great. Now, there are a few requirements before you can elect S Corp status. So you'd have to meet specifically with your tax advisor. But I think looking at S Corps are great because you can save on that self-employment tax, that 15.3%, and that kind of goes into now payroll tax, which is deductible. And so you save a lot of money there. You're able to put yourself and your family on payroll. You can put your spouse on payroll. So those are a lot of strategies just right there by electing the S Corp that allows you a lot more flexibility. I think that's one. I think your vehicle deductions, everyone has a vehicle. Most times you drive it for business. Now, if you're not driving for business, you can't sway that one. You can't pull it over the IRS's eyes. You want to make sure you're tracking your miles, your business miles effectively using a mile tracker. So you can get any of them on Google. You can just type it in on Google, mile trackers. They'll recommend one. I like Mile IQ. And so you want to make sure you have that substantiation. Also, don't forget your meals, right? Every business owner, whether they're product or service, they have to meet with clients. They have to meet with their team. Now, if you're actually feeding your team, let's say you have a warehouse or a factory, or you're all in the office, that's actually 100% deductible. If you're meeting with a client or a prospective partner that you're looking to discuss business with and do business with, now that is 50% deductible, all right? And you have to pay for the entire bill and make sure you keep your receipts just in case you're audited. So those are 3, I think, general tax strategies that most business owners can actually use.
So I want to make sure that we recap this for the audience that are kind of the basics. Some of the tax strategies that can really save you money right out the gate in taxes is moving your company into or setting your company up as an S Corp, making sure that you are maximizing your mileage deductions based on using your car for work, and then also any meals that are related to work, keeping the receipts, keeping track of that, because those are great ways that you can actually save money. Talk to me about, let's say we've got a company that's set up as an LLC. How does that LLC move into the S Corp structure to capitalize on all the benefits of being an S Corp?
So if the company is currently as an LLC, right, and they can be a single member LLC, which is a disregarded entity in the eyes of the IRS. Let's say they're a single member LLC. They would pretty much use form 22553, and you would pretty much fill it out. If you're married, you have to have your spouse sign it as well. Okay. They're technically a shareholder. You want to make sure you sign it in wet ink. So these are specifics to make sure that it actually goes through. And then you want to either fax it over or mail it in to the address on the form. Now, if you're in New York, and I'm just using this as an example, some states have different laws. Most states only need the 2553, right? And they actually recognize the federal election. Now, if you're in New York, for example, New York doesn't recognize the federal election. And I went through this with a client. They thought they were a New York S Corp, and the entire time they weren't, right? They had only elected federally. So New York has a separate S Corp election form that you have to fill out. And so you want to double check that your state actually recognizes your federal election. And if not, you could be in a little bit of trouble because you will owe back taxes for those years you were operating only as a federal S Corp.
Is there an average savings that you can expect to have when you transfer from that LLC into that S Corp on your taxes?
It's really the self-employment taxes around there. So I think that 15.3% is generally, and I'll say a percentage just because everyone has different profit numbers. So I'll say a percentage. I think that's the first stage. But then also, when you pay yourself now, if you think about it, as a single member LLC who's not an S Corp, for instance, you pay yourself by just pulling money out of the company, right? And that's considered employee draw. That's not deductible. So now, all that money that you were paying yourself with an employee draw that wasn't deductible with the S Corp, you put yourself on payroll, and now you actually get that payroll deduction as well. Wow. So that's full immediate savings just with the S Corp. You can also set up a few things like your health insurance, your retirement plans through it, just like a regular company, right? Since you're separating yourself, you're becoming the employee and your business is actually the employer now.
So I've heard a lot online because there's a lot of talking heads out there. And sometimes I fear the information isn't necessarily clear or correct. How do you bring your spouse or your family member onto payroll?
So essentially they're an employee, right? And so I typically like to do it, make it look very like a normal company. You would send them out an offer letter, all right? You can get their social security, and you pretty much onboard them very similarly to how you would onboard a normal employee. So there's no real bells or whistles, especially if it's your spouse. For instance, also, if you're paying your kids, you don't actually have to be an S Corp, right? If they're below 18, right? Now, over 18, you would want to put them on payroll, but below 18, you can pretty much just go ahead and pay them, right?
So how do you pay your kids? How does that work?
Yeah, so especially, let's say there's two parents and they both own the LLC, or even if it's just one, you can pretty much go ahead and pull that money out of the company, pay them, and obviously they have to have some type of job. So you want to write up a job description. You want them to actually be doing something that's suitable for their age. So I like to say you can't just pay a 2-year-old. You're not
this child. We're going to child labor laws,
right? They're not paying a 2-year-old. So I like to say the nice soft spot is between 7 and maybe 17. And so they can do things around the office. They can help you out administratively. They can help you with filming if that's something they're into as they get a little bit older. And it really depends what your business is. Now, if your business doesn't allow for a child to actually be employed with your business, then it wouldn't make sense. Let's say if you were operating heavy machinery, a child wouldn't be in that business. All right. But most home-based business owners can actually do this.
And is there a limit to what you can pay them?
There isn't a limit, but I would say strategically, you would want to pay them up to the standard deduction. And that allows them to not owe any taxes because it's pretty much going to come out of the standard deduction, and the standard deduction will offset that. And so the standard deduction changes every year, but I would say up to that amount is strategically the best amount to pay them.
So walk me through the standard deductions, because the tax code, as we know, is incredibly complex. So bring some clarity into, as a business owner, which is most of our audience, what are we looking at for our standard deductions?
Well, in 2024, it's going to increase about 14, I believe, 6. So for 2024, it's 14.6. Last year, 2023, it was about 13,850.
Okay.
So that number is going to increase every year. I think that we may see, I was down in DC on Capitol Hill advocating for the profession, unlicensed tax preparers. And just to be clear, I was down there regulating or advocating that unlicensed tax preparers be regulated. But I think the standard deduction is going to go up. It's obviously going to keep going up. It may also be cut in half. We have to wait and see kind of what the next policy and election, what happens with the election, but it may be cut in half. We used to see something called a personal exemption and a standard deduction. And so that all went away with the 2017 Tax Cuts and Jobs Act. So it may be cut back in half, or it may continue with only being a standard deduction. All right. So we'll see what happens. We don't know.
So talk to me about the importance of and some of the things you want to see in terms of bookkeeping, because that can be a challenge for a lot of businesses. How do you keep really clean books and records?
Yeah, you want to make sure you, one, have a professional doing it. Actually, you don't even need a professional to do it at this point. You can get on QuickBooks yourself. If you're self-employed, you can get on QuickBooks. Just take a picture of your receipt, upload it. Really, QuickBooks, Xero, FreshBooks, there's a ton of online resources where you pretty much link your bank account to it. And it pretty much tracks all your transactions. Now, the hard part is making sure that your financial statements are correct. Now, if you have a single member LLC, that's great. But it gets really complicated once you elect S Corp status. Your balance sheets have to be correct. Your basis has to be correct now. And so these are things that QuickBooks or any other online software for bookkeeping may not automatically calculate, and you may need some help in that area as well. But I think bookkeeping is important. I've had nightmares. I've had clients the night before the filing. This just happened, actually. The night before the extension deadline, October 15th, pretty much sending me screenshots of their bank statements like there's no bookkeeping. And so I'm like, hey, buddy, I can't file this tonight before the deadline, but I'll work on it for you. And so the worst thing is to have no bookkeeping system and just have bank statements. Well, at least you have the statements. But it's really bad when you don't have a system of putting it in Excel at the very least, right? There's a Excel that I can provide your audience that pretty much has, a profit and loss. It has a sample balance sheet. It has typical expenses that you would see in most businesses. And then it has room for their personal expenses as well. But I think the worst thing they could do is not have any bookkeeping system. The second worst thing they can do is pretty much just have bank statements and then manage QuickBooks or any online platform by themselves. Yeah.
Then if it's really important for you to have your books in order, and you might need to have a professional bookkeeper doing so, what does your tax team need to look like? Who are the key people who need to be managing your books and managing your taxes for the greatest efficiency?
Make sure they're licensed, number one, right? So CPAs are great at accounting, bookkeeping. I think they're great for that as well. I think your enrolled agent or tax strategist, they can be an enrolled agent, they can be a CPA. As long as they're sitting with you and planning ahead, I think that's someone you need. So whether they're CPA or enrolled agent, just make sure they're licensed. So one, we have that accountant, CPA, and they can also, not only would they advise you on just doing the bookkeeping for you, but they can advise you on cutting expenses, normally your operations in the business, sort of like a virtual CFO or a fractional CFO. So I think that's who you should really look for. It's a fractional CFO, someone to actually not only just count your money, but advise you on the operations and the use of that money as well. I think a tax strategist, whether it's enrolled agent, CPA, someone to help you look forward and reduce that tax bill. And then also you want to have someone in-house, maybe a treasurer, someone that's out there getting grants, loans for you, making sure the company is properly capitalized so you can have the operations, you can build the team out. Because without proper capitalization, there is no team, right? You're your team. Now you're what's cannibalizing your entire operations, your business. So it's very hard doing a business as a business of one. Yeah.
And would you recommend within that group also having a bookkeeper, or would one of these other titles act as your bookkeeper as well?
Yeah, I think a bookkeeper is excellent. I don't suggest having them be your bookkeeper as well. I like to bring in professionals for that specific purpose. I don't like to give jobs and say, hey, do this, but also do this also. Things can get very confusing once you do that, and you're not extracting maximum value from each person to focus on that one specific thing. So I would say getting a bookkeeper and then also having an accountant who advises on the operations of those numbers.
Got you. So if we're talking about putting together that stellar tax team, you're looking at having your CPA accountant who's doing the preparation, your tax strategist or your enrolled agents who's really helping you with the savings, having a fractional CFO who has insight on the business and how you're running the business, having a great bookkeeper who is actually keeping track of everything. And then I love the idea of having that treasurer who's somebody who's helping you figure out the finances of the business, get grants, get loans, and help your business really grow and accelerate. That's actually one of the unique things that I've heard of from anyone is having someone on your team who's actually focused on the lending or the debt side or the finance side in terms of capital raising for your business. That's really great insight.
Definitely. Thank you.
So talk to me about when you have someone that you're working with, how do you keep them abreast of all the complicated tax strategies and changes that are happening? How are you educating them to make sure that you guys are actually working together as a team?
So, and I think that's very important because of the tax landscape. It's changing every day, every minute, every month, right? If something happens, the tax code changes. Like the only thing that's constant is death and taxes.
True.
All right. So for me personally, I mentioned before, I was down on Capitol Hill advocating for the profession, meeting with other tax professionals, speaking with the IRS commissioner, speaking with past commissioners. And I think that's the first thing is you have to be informed before you can inform anyone else. And so I learned a lot at that meeting. Hopefully I'll get back down to Capitol Hill sometime next year. Gets to learn a little bit more and pick their brains. So I think that's the first thing is being informed. And then you can use newsletters. You can use meetings that you can say, hey, let's have a catch-up meeting. This is what's coming out now. It pertains to your industry. I think you should know about it. Here's how it'll impact you and your business moving forward. There's also different associations. So I'm a member of the National Association of Enrolled Agents, and they have tons of forums, tons of groups, meetings that we discuss upcoming tax changes. There's a magazine that comes out every month, so that keeps us abreast of new changes. And there's new tax IRS bulletins that come out as well. Watching the news helps. And so it's not really one or two things. It's really an entire lifestyle of being engulfed in the information and then not being afraid to share that information. No gatekeepers.
So staying on top of everything that's happening in the industry is important. And it's important because it's going to help you avoid the mistakes that can happen. What are some of the biggest mistakes that people make on their taxes if they're assuming if it was like this in the past, it's going to continue to be like this? What are ways that you help them avoid mistakes? What are some of the key mistakes they need to look out for?
Yeah, so the key mistakes on a return is when they just let someone down the street do it. Now, I've dealt with this personally. Folks that I know personally have been taken advantage of. Let's say if they necessarily weren't a business owner, they were just everyday working person. They're getting their refund stolen. So that's happened before. Now, also ID theft, that's something to look out for as well. Your social, your business EIN number, that can happen as well. So you want to make sure the first thing is you're working with a reputable professional who has a code of conduct to follow. So as enrolled agents, we're bound by Circular 230, which is really a code of conduct for how we should conduct our business, the laws that we can operate by. And I think that a few mistakes business owners I've seen before, like I said, they're letting anyone do their taxes, or they're switching between tax professionals too much. I also have heard that some business owners actually forge their own numbers and they're rounding out their numbers on their tax return. This isn't as funny as it sounds, but they'll say, hey, marketing was 10,000 really in real life, but I'm going to make it 15,000. The IRS knows that when you leave a number that ends in 0 or 5, that most likely it's not as round as you just made it on a tax return. That's the number one mistake. Stop rounding out your numbers on a tax return. Stop rounding up, because that's very easy to catch. I used to work in forensic accounting, and so that is very easy to catch. We don't want to see any numbers rounded up. I think books and records are important as well. You need to maintain your books and records. Technically, if you don't have any accounting records, those tax deductions won't hold up if you're audited or if you go to tax court. And so you need to make sure you keep proper proof and records. So that's why, let's go back to accounting and the bookkeeping. That's why that's so important. Everyone wants great, large tax deduction, but they have no proof. So those are just a few of the mistakes and problems that I see business owners going through with their tax returns.
Well, that's very interesting. Common mistakes that business owners are making is not working with a professional, rounding up. Guys, stop rounding. Those zeros and fives are not good. The IRS knows that that is rounding, and it can definitely harm you. And keep good records. It's that simple. I love that. So talk to me about a client that you've walked into and it's just been an absolute mess. Their tax returns from the past weren't prepared properly. They weren't working with a professional. How did you help them right the ship? Give me a client story that was a nightmare that you were able to remedy.
I think that with a nightmare client like that, one, there was maybe mistrust. So in my case, a client came to me. He was actually a friend first, business owner, and he had been working with a CPA that wasn't in New York at all. So I think the guy was in like Milwaukee, and my client's business is in New York, so it didn't make much sense.
Right.
First of all, I think that he was an S corp. He didn't elect New York S corp status, so that was a mistake. So he was all over the place. Then he had a huge tax bill, and part of the reason was he wasn't taking payroll. So that was a huge deduction that he just didn't take. No one advised him on that. He had a huge tax bill. We had to represent him and pretty much reduce those taxes, make deals with the IRS, and just negotiate on his behalf. So that's how we really started cleaning him up. His bookkeeping, just done in Excel. So the balance sheet and the basis for the company as an S corp was non-existent, and he's well over 250,000. And so if you've seen the S corp return, once you're over 250,000, you have to disclose your assets. You have to pretty much report your basis. You have to prepare the balance sheet. So all of this was out of whack, and so we were able to right the ship, get him back into good standing with the IRS, get his books and records up to date. And so he's a happy camper now, right? He's paying himself properly. He has benefits for his family. And we've referred him to our partners. So we have partners at payroll companies like ADP. We have state attorneys, tax attorneys that we work with as well. So it's a team effort as well as financial planners. And also, I think that anyone that you decide to work with needs to have a team. So it's not just, hey, work with me, I'm going to save you all this money on taxes. It's not about that. It's about being able to holistically build your business so you can truly live the life and have the business that you always wanted. And so this advisory game is an entire holistic approach, and we take that very seriously.
Awesome. Well, there's something I think is really important for us to talk about, and as we're getting towards the end, let's talk about some tax-free wealth building strategies, because I know that's something that you work on intensely when you're working with business owners. Talk to me about what that means and the type of strategies business owners should be looking at.
They should definitely look at, especially if they're a business owner, they need that retirement. Roth IRAs, you put the money in, it gets taxed, right? You put it in and it builds tax-free. So I think that's a good place to start. If you have one of those for your business, that's an excellent place to start. Another one of my clients, for instance, let's think about this. They can pretty much, and this is just an example. Obviously, you would want to work specifically with your tax professional. But those same clients that are employing their children, mom and dad, employing their children, right? The mom and dad own the LLC. They're employing their children. They're paying their children up to the standard deduction. Now the kids have that money. There's no tax that's owed on it because it's up to the standard deduction. So what do the kids do with that money? You can put it into a Roth IRA. Plain and simple. It can be a self-directed IRA. You can use it to invest in real estate. I think that's the tax-free wealth part that's being generated. And at that point, you have the most flexibility.
And right now you said it was 14,600, correct?
I believe so, for 2024.
2024, okay.
I may be off by a couple dollars there.
So other than the Roth IRA, is there anything else that you think that these business owners should look at in terms of real estate or other investment vehicles that can either are tax-free or can help reduce taxes?
Yeah, how could we forget real estate? And that's one of our main strategies that we leverage as well. I have an extensive background in private equity real estate from the accounting and tax side. So I love talking about that as well. But specifically with real estate, depreciation is the best tax deduction you can ever get. And so buying more real estate, not only just buying real estate, but making sure that you buy real estate that allows you to, especially if you're earning well past 150,000 and let's say you're a service provider, you're a professional, you're not necessarily a business owner. How do you unlock those passive activity loss limitations? After 150,000, you can only take up to 25,000 of it, right?
Right.
Of losses. And so a great way to recharacterize that income and not make it a passive activity is short-term rental real estate. Now the income is recharacterized from a passive activity, and now it's actually active activity. It's an operating business. There's cost segregation, there's bonus depreciation. So you can recognize a lot of more tax losses in that first year. I think that's a strategy. Depreciation, if you buy enough of it, a large enough property, that depreciation, you can take that back. The money that you save from depreciation, you can always invest that as well. So I think that's a good general strategy to use. And it gets a lot deeper if we keep going down the rabbit hole. So I'll stop there.
So some of the key tax building strategies that I'm hearing is Roth IRA investment, because those are tax-free up to whatever your limitation is. And then also real estate. And it's because of the depreciation aspect of real estate.
Definitely.
Awesome. Well, here's what I would love to do as we wrap up. I'm going to take you through our rapid fire questions, which we do with all of our amazing guests that we have on. So, coffee or tea?
Tea.
What is your favorite quote or phrase in business?
I would say that never been asked that. I think it would be, the quote goes, most businesses fail, so form about 7 or 8. I think that's how it goes.
Awesome. Do you have a favorite book in business?
Other than my own Tax-Free CEO, I think Rich Dad, Poor Dad really helped kick off that mindset. I think everyone says that, but the mindset is really what that book implemented. Yeah, kick that off.
What is one of the main things that you disagree with in your industry today?
I think the general advice. I'm never one that likes to give too much general advice in terms of tax advice, or the shocker saying, hey, did you know you can do this? But it's not necessarily the full context of the advice. And so it could be misleading. And so I hate seeing it on social media, but that's one thing I disagree with. Yeah.
Give us 3 money-saving strategies that you can implement in 2025 as a business owner.
Yeah, definitely. Make sure you have some sort of retirement account for your business. If not, you're missing out. So some sort of retirement. I would say make sure you have your HSA, your health insurance, and then also make sure that you're keeping track of all your expenses so you can maximize those deductions as well and turn that into investments later down the line. Yeah.
That is very, very good advice. So what is one of the number one things that you see that kills businesses today?
Being a business owner of one or a business of one, being afraid to hire out and not leveraging talents in the proper way. So as an accountant, I'm not a marketer.
So let's say you're a business doing $10 million a year in revenue. Jared walks through the front door and I hand you a $300,000 check. How would you advise them to reinvest that in their business to double their revenue over the next year?
I would hire employees, strictly, whether it's salespeople, depending on their business, salespeople, someone to train the salespeople, and then also someone to fulfill the product.
Awesome. So last question. What is the biggest obstacle that you had to overcome to get to the level of success that you are at in your business today?
Imposter syndrome.
Awesome. Brandon Madden, you are amazing. This was so helpful and insightful. Now we know what an enrolled agent is. We know how to save on taxes. Tell everybody where they can reach you.
You can reach me on Instagram at Business by Brandon. You can find me on LinkedIn, Brandon Madden, MBA, EA. And you can go to taxfreeceo.com to check out our team.
Awesome. Brandon, thank you for joining us on 0 to 100.
Thanks so much, Jared. Appreciate it.
Thanks for tuning in to 0 to 100 podcast. We hope you feel inspired and ready to accelerate your business. Remember, your journey to success starts with a single step. Keep learning, keep growing, and keep striving for greatness. For more resources and show notes, visit jaredguyrandolph.com. We'll see you next time.